Okay, we are live, everybody. Good afternoon. It is Wednesday, June 23rd, 2010, and we had the Fed meet today, and no change to monetary policy. That wasn't a surprise to anyone. The market really wasn't as volatile as it typically is after a Fed announcement. We had a little bit of jerkiness in there, I guess, but then it just kind of closed right around where the market was, pretty much right up to before the Fed announcement. So today was a pretty quiet day. We did hold above that 20-day moving average on a closing basis. And yesterday I was pointing out that this was an area that we were looking for as support because it had all of this prior activity in this range here, that is on the volume by price chart, that we had seen that this is really the biggest area where this market is traded. Earlier in the week, we of course saw that there was heavier resistance being formed up near that 112 level, and breaking below the 111 area was really, in my mind, the trade of the week here. So, and I expect it will continue to be. So it's been a down week so far, obviously, 3 out of 3 days. The bigger event was, of course, breaking below this 111 area, and from there we were expecting a move down towards 109, and we got it. So that was what I had outlined in Monday night's video. Now we're down here. We're at this area where we've seen significant activity. So, in other words, price has memory, and there's a lot of trading that's occurred in here. So it's also coincident with that 20-day moving average. And if we take a look at a Fibonacci of the recent rally, we can see that we're right about the 50% retracement of the low that we had seen this month to this month's high as well. So not that that's a huge piece, but when we have these three things coming together and telling us pretty much the same thing, that it's an area that people are looking at as far as potential support, then it tends to become that self-fulfilling area where we do in fact find the support. So we've got a bunch of mixed messages really across all these different time frames. Intermediate term, though, I think we have to look at the declining 5-day moving average and say that as long as we're below that declining 5-day moving average, that any long side trades should be kept to a day trade only. And in my mind, they should only be done while the S&P 500 is above a daily volume weighted average price, and in particular when that volume weighted average price is advancing. Now today is an anomaly because we had the news and we had all that the Fed news, that is, and we had all the volatility around that. So we might need a day or two to kind of settle in here, turn sideways, and then see if this market can in fact gain some footing in here and create a higher low at this 50% retracement level, and then maybe push back up towards that 50-day moving average and test that area once again. But for right now, it really, to me, says that we've got a lot of mixed messages here, and it's not time to be pressing bets. We had seen the NASDAQ had briefly pierced that 50-day moving average on Monday, and it's fallen back below what was its important level of resistance that was broken last week. So this was similar. 4660 was similar to the 111 area on the S&P 500, and of course the S&P 500, that 111 area. Let's just go back to the S&P 500. That 111 area was also the 200-day moving average, which we're now below again. So moving above and below that 200-day moving average, that's going to happen. But we have the daily time frame. The 50-day moving averages are declining. The market is, I think, what you could consider best case is trying to just find some footing, find some stability after selling off. Worst case, though, is that we're creating these higher lows on the weekly charts that if we break them down, then we're going to see this whole thing unfold. But that's still going to take time, and until we have that clarity from the longer term time frame, it appears it's going to be choppy trading, and we generally want to be keeping our money for swing trades in the direction of the 5-day moving average. And right now, that 5-day moving average in these markets is declining. The Russell 2000 came down and touched upon its 200-day moving average today. So you can see it's kind of maybe coiling between the 50 and the 200-day moving average. Well, that's a large range, and I wouldn't suggest trying to buy the 200-day moving average and sell the 50-day moving average. I know some people do try to do that, but to me, we're on this 10-minute time frame. We broke this 66 level this week, and that was after on the daily. Actually, let's look at the 65-minute time frame, and I'm just going to get rid of that volume by price because sometimes it can be a distraction. But what we had seen here was that last week we had seen a failed breakout past the resistance at the 67 level, and from that failed move, we have in fact seen a fast move lower down towards $64 a share. So breaking the support at 66, that in my mind is also what was the easier trade this week. And today we're trying to stabilize a little bit, but you can see we still have these lower highs and we have these lower lows. So we need this market to stabilize before we can begin to think that it's in a condition that's going to be able to be purchased for a swing trade to the long side. Right now, the evidence just isn't there. Same thing goes true with the semiconductors. They got up to the breakdown level, but that breakdown level, which is similar to this, would be 46.60 on the Qs. It would be equivalent to 111 on the SPY. But we're below the 5-day moving average, which is declining. And this support, so far at least today, we have a lower high, and that support looks like it's acting as resistance for now. In the daily time frame, it's really probably more neutral than anything. The bigger level on the semiconductors is about $29.10. So if we can get up above there, then maybe we got something going. But then you back it up to the weekly time frame, and it's still kind of a mess. So not a lot to be excited about. The financials made it up to the top end of the range where they were supposed to find resistance at $15 a share. They did find resistance there. Today we'd seen they came, drop back down to the 20-day moving average as well. A little bit heavier volume, and something I'll say about that volume is that we've seen a kind of increasing volume the last 3 days, and volume typically comes near a turning point, the heavier volume. That doesn't mean that this is a turning point, because tomorrow, of course, we could see volume that gets this big, and the day after we get volume that is even bigger than that. So you can't time your trades on volume. You have to look at price only and say, what's the definition of trend on whatever time frame you're looking at? And we're looking at a 10-minute time frame here, below a declining 5-day moving average, with the market making lower highs and lower lows. So you've got to just be a little bit more patient with these markets until we have better evidence. But this 1440 area is where we were supposed to find support. We did. If we break that, then we're probably heading down towards about 1420 in the financials near term. Gold has had a rough couple of, but not actually, it's had a rough week, but it was really one day. It was basically Monday we had that large sell-off from this breakout to all-time highs. So you don't like to see a market break out to all-time highs and then completely give up those gains and have a real negative day the next day. Now, it hasn't damaged the uptrend in gold, and we can even see that this trend line and the 20-day moving average are holding here. But we have these higher lows, and I think that basically at about 118.5 is probably 118.5, 119 is probably where we would want to see gold find some support. The gold stocks, they're starting to try to stabilize here a little bit, which is good because this is the area where they're supposed to find some support. That is, that this prior resistance we had seen one breakout from there fail, and then the market rebuilt underneath there, and you could say, it had this, I don't know what you want to call it, a horned cup and handle or whatever, but it broke out. Now we've got this, the market ran up to this level of prior highs near 54.5, 55, and then it sold off a couple days hard. We're still, though, looking at this gold market, you look at it, we're still making a pattern of lower highs and lower lows. So right now, it's still too early to buy gold. Some of the gold stocks that I've been keeping an eye on include this Newmont Mining, because it was really, and continues to be, the stronger gold stock. That it broke out past that level, which was similar to that 55 basically on the GDX. That Newmont made it above this prior peak here, and we see that in the case of Newmont, it's holding up above those levels as well. That is, that prior resistance is holding a support. We've got that rising 10-day moving average, but on the 10-minute time frame, we still have this pattern of lower highs and lower lows. So it's not quite ready to be bought yet. And I think you have to look at even a stock that's been real strong in the gold mining group. I don't know what the news was in there today, but Royal Gold had been looking like it was just in a normal pullback mode, and then it got just really crushed here. So that shows the danger of buying early on these stocks. That when it's got this pattern of lower highs and lower lows, you just have to be very careful with it. And that could happen in Newmont. Who knows? I certainly don't. I don't follow the fundamentals. I'm not really interested in that. I'm just interested in making money here. And right now, long on the gold stocks doesn't seem to be the right way to go. And in fact, in most stocks. So let's just take a look at some of the stocks you guys are looking at. Sounds as though I'm in a tunnel, and I've got my headset plugged in here, so I don't know why that is. As long as you can hear it loud, then that's fine. If it's not a volume issue, the tunnel, you can get over it, I guess, Hunt. Let's take a look at BBND for Eborian. BBND, let's take a look there. Let's see, what's the average daily volume in here? 277,000 shares. Is below a declining 50-day moving average. BBND looks to me like a complete waste of time. So it's below all these on the weekly time frame. It's below the 10, 20, 30, 40 week moving average. It's just hanging here by its fingernails. I'd say forget about that stock either, that it even exists. Now, because I said that, it'll probably gap up to 370 tomorrow, but I don't see any advantage technically to trading a stock like that. By the way, Darren, thanks for the retweet on that. Darren from Added Trades, who has some good stuff going on his site. Let's see. Divas asked me, do I have a plumber? Okay, anyways, I think you're talking about... maybe that is an issue. Let's put this microphone over here and see if that can help a little bit. And that's on some little telescopic type thing, so it makes a strange noise. That wasn't me making those noises. Anyways, I know it's not a swing market as you widely said, but what would I say about MED? MED, I saw that they're getting added to the to an index on Friday. That usually brings in some buying. I don't know if it was the S&P 500 that it's getting added to. I actually prefer Nutrisystems in this space, as people say. Seems like the popular thing to say is in this space. But Medfast, it's trying to hold the 200-day moving average. But here on the daily time frame, you can see that it's making this little pattern of lower highs and lower lows. Now it's finding some support in here, but it is below the 50-day moving average, and the 10 and 20-day moving averages are heading lower. So maybe you get a little bit of a bounce based on this addition to the index. But I would say that below a declining 50-day moving average, you got to be very careful with it. Audio is distant. Okay, so JDub929. I shorted Netflix last week and got stopped out yesterday for a nice gain. Is it time to get back in? Thanks. I would not short Netflix. To me, it's insane to short a stock that's in this type of uptrend. If you're going to short it, I think you're on your own. I'm a trend trader. It doesn't make sense to fight the trends in here. You can make some good trades in there, no doubt, but in an uptrend, the sum of the rallies is going to be greater than the sum of the declines. So there's just naturally more opportunity upside until we're in a confirmed downtrend, and Netflix is in a serious uptrend here. So I don't think you want to get short this thing. It just doesn't make sense to me. It's not my style. If that's your style, then good going. How about A1? And I know a lot of people. A lot of people have been asking me about A1 for since they came public. There are very few people who've made money on this stock long. It is in a horrible downtrend. It remains in a horrible downtrend. We have this pattern of lower highs and lower lows, And we get these little bounces that get people excited, and they're good for a little short-term day trade, but there's nothing here at all to suggest that the trend is changing for this A1 systems, AONE, A123 systems. Now, the best thing you could say is maybe it's beginning to neutralize a little bit. We're getting some volume in here. We've had this heavier volume day. We had heavier volume yesterday, and then today it followed through on the upside with a little bit heavier volume. So perhaps we're going to see the stock run up towards $10 a share, or that declining 50-day moving average. But to me, it looks like a rally that's destined to fail. That maybe you get it to rally a little bit in here, but it did break some resistance on a 10-minute time frame. So you've got an uptrend on the short-term time frame, but you're fighting the bigger the bigger downtrend rather. So I think you could probably see the stock trade up some more. Let's take a look at the volume by price on this stock and see if we can get some maybe some insight into that. To see where there's some bigger levels. And this is actually kind of encouraging to see that we've had this big volume down here. So perhaps we could get a move up towards about $10 a share. And we broke a little bit of resistance here today near that $9 level. So I think that as a counter to the primary trend, which is still clearly lower, that you could get a bounce maybe up towards about $10 a share. But it's to me it's like shorting Netflix. Anyways, how about a look at Akamai for Daniel, AKAM. And Akamai just remains in one of these beautiful uptrends here that it had broken some resistance, back in, fourth quarter of last year, consolidated again, and just in this real nice uptrend. Where has it come from? It's had this beautiful rally. Where is it now? Where is it now in relation to where you might expect to encounter some resistance? And you look at this, it doesn't mean this is the end of the move, but it's had this huge run pretty uninterrupted, and maybe it's but it's not showing any signs of slowing down on the daily time frame. So you've got to favor a stock like Akamai to the long side. It's in a huge uptrend. It had a nice little shakeout in here, and I think if it begins to stabilize a little bit more in here and maybe gets above about this 46 level, and here's where that volume by price can be helpful as well. We can see what the bigger levels of have been where this stock is traded. So I think it probably getting back above $46 a share, that this stock will recover and probably continue on to new highs. So I guess my volume is better when I brought that microphone down, and even today traders looking for the ice cream truck in the background. Sounds solid. For Friday, Russell is getting rebalanced. Any plays you might see? Jack, I don't know, and I think that's what Stock Diva was talking about as well, or maybe she wasn't aware. That's what I was referring to, is that MED I saw was getting added to one of the indices. I don't remember which one, but a lot of times there is a bias towards the upside for the stocks that are getting added to it. So Reader Finance, I did just take a look at Akamai, so that was two people looking for that. And let's see, how about VMW for Jack Scholes? VMW. VMW is another one of these stocks that's in a nice uptrend. It had pulled back to the rising 10-day moving average and bounced nicely. Now it's pulled back to the rising 20-day moving average. The volume that it's pulled back on doesn't look like it's damaging to this trend. So you've got to continue to give the benefit of the doubt to the buyers in VMW. And you're looking at a 10-minute time frame. We still need to recover a little bit in here. I would wait for the stock to find some stability, and maybe we're seeing that. We've got this little higher low, and getting back above 71 would be encouraging, but probably more particular above about 71.5, which had been 71.5 to 71.80. This was resistance that became support in here. So I think in a day or two, if it continues to hold up in here, that it probably ought to continue back to the upside once again. Could I take a look at BEBE? And I will look at BEBE, and this will be the last one we look at. BB Stores, or whatever how you pronounce this one. The weekly time frame, it's been trying to break past that $10 range. but it gets rejected up there and then drifts back down towards $5 a share. And here we are down at $6. It's, we've got on a shorter term basis, we've got a stock that's pretty much in a range of 6.25 to 7. We've got a declining 50-day moving average. If it gets back above $7 a share, maybe it makes a run for the 50-day moving average. Kind of similar to AONE, but it doesn't really look that exciting here. So that's going to do it for today, everybody. Thanks for tuning in, and hope you have a profitable rest of the week.